right, welcome everybody to the Monday stream. Who's ready for some bearish movements? Nah, just joking. But yeah, who's ready to get started with another week of very interesting market action? Obviously, Papa Powell sent shockwaves through the markets with his non-pivot attitude. Probably no surprises there. But what was a surprise on the Friday session was, of course, the market not spiking a slightly higher high before having its big movement down. What happens here, not so much that it's pivotal, but what happens probably more down here and here is what we'll be discussing moving forward this week, because we've got some key levels to be looking at. Obviously, markets today sitting in a very middling range. There are still key potentials, which we'll discuss, but we've got SP 500 coming your way. Obviously, crypto. We've also got everything to do with the commodities right now. Gold hit one of our key levels just before 1720. Finally hit. Now it's moving up. We'll find out whether that can happen. And the US dollar is on a bit of a sell after tearing a new high just before. So will everything reverse come US Open? We'll certainly be talking about that and much more. Welcome everyone to the stream. I hope you had a good weekend. Hopefully no one got burnt too badly by what was a very, very aggressive short sell-off. Let's just quickly talk about it right now. So, of course, the expectation from this point here on this channel has been short overall bias. Now, why? Because, of course, August, September, and October, frankly, suck in the stock market. Basically, from the 15th of August to the 15th of October, generally we have action. Now, it's a mixture of the holidays and them ending, which, of course, happens next week in the US. And it's also a mixture of earnings in general running out. So, of course, we've had that earnings. We've all gone about the Fed pivot, and now we've got the excuse to potentially sell off the market down to lows. We'll talk about the criteria here that we'll be looking at moving forward as well in today's video, the bull, the bear case scenario, and everything else. So the market has been short. Now, a lot of you would know that the way I like to short markets generally is options. There's a reason why, because, of course, I'm Australian. You got to sleep through the night, guys. So sometimes when you're going short, you really want to work on time. And of course, our idea was short. This level is certainly a key level for potential take profits of a CFD, with the idea of a movement down to most likely a 39.20 and possibly even a 37 kind of 50-60 area. Okay, so 50-60. This is still on the cards. We'll discuss that later. So how do you do that? Well, options is one way. And of course, if you're going to take shorts, you have to be able to, deal with the pullback. So what our plan was obviously with the longs was to try to take them into the gap, 42.28 and 42.40, 42.50. Now, just before Jerome came out, we saw a spike to 42.15 approximately. The market then, of course, sold off. Jerome came out, sold off, rejected, and the rest was history. You've got to really ask yourself the question, when you get so close to the take profit and Jerome's coming out, is it worth scaling back the position? This is what we always talk about, scaling. Sometimes there is key risk. In this case, I guess it was. And that's why, maybe it's better to take some position off. But I just want to quickly explain that, because for some people on the weekend video and just in general, I was getting some interesting messages, and I've got to say that this is the plan. And the plan is still 39.20 and lower. But if you're trading CFDs, if you're trading futures, can you handle the swings? Has to always be the question that you've got to ask yourself. So anyway, let's dust ourselves off for this new week and figure out what's happening next. I'll quickly read some chat messages here. Morning, everyone. Make sure you smash that like button if you do enjoy our videos. Valdo here coming in. Ahoy, Tom. Grab yourself a mug of coffee at 10:30 at night. I'm not sure I'm going to do that, Valdo, but thank you very much. And a few other people saying here some key levels. Are we going to rebound around 4,000, et cetera, et cetera, et cetera, et cetera. So it's awesome to have you guys here. Let's talk about all these zones. First up, what do we got? Well, we've got a market at 4,028. There's a gap, of course, between the close, which I think is like 4,050 something, and where it is right now. We had an aggressive market sell-off. A lot of you are going to be expecting the dip purchase back up, okay? First things first, where is the key level of potential support here? So we have previous resistance around this zone. We have previous kind of support or demand sitting around just underneath 4,000. I tweeted it just before. Follow at FX Evolution on Twitters. Let me go to the Twitters. How do I go to the Twitters? Here we go, profile. And yeah, come over and follow us. And you'll notice that I just tweeted a couple of key levels. So we've got here 40.90, 41.25 resistance, 39.95 minor support, and 39.20 major. Okay, so they're the key levels that we're looking at here. So why do we get this kind of minor support? Well, it's really around this two kind of combo meal deal that we had over here. There's a fib of the whole move for sure. It's like a 50 fib, but also it's this key level here. So the way that the market works is that it might try to scare people early. It pushes down a little bit lower, then it moves up, structures up, and of course then moves towards the 40.90 and potentially the 41.25. This is certainly a case scenario for today. The instant little bit of a sell-off, followed by the rally, followed by the mid-lunch kind of session, and then the movement up. Let's call that opportunity one, okay? Op one. The other opportunity is it just keeps rallying up. Bang, 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 bang. We hit a 40.90. We structure up towards a potential sell, or we go straight into a 41.25 and we structure up towards a sell. These will both be key levels moving forward. 41.25 is a big zone. And a few people know this now. A few people have got this on the charts. We've had this for a little while. It's a very large zone. So I would ideally like to see it go bang, 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 move up, and these key areas to be the spike area where we see that turnaround towards the reshort. That's the main kind of scenario. There's that little bit of spike. If you miss an opportunity here, it just keeps going long, 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 potential short opportunities. Where is the long? What if the market just goes bang straight into 39.20? If it does, I've got good and bad news. Bad news is I doubt it holds. I mean, it bounces instantly. It probably will take some time to form structure around this point. 39.20 is no joke. We've got a previous gap fill there. We have previous resistances and supports here. It's a serious level. 3900, 39.20 is no joke. That's a major zone. So we need to target that kind of concept in the future. I find it hard to believe that the market will not touch this now that it is here at some time over the next couple of weeks, if not this week. Maybe we've got jobs numbers coming. So intraday, we're looking small time frame. We're going down and dirty with the charts, and we're saying, okay, what's happened so far? We've made as low as 4,005, made as high as 4,040, and currently we're sitting at 4,027. If I was the market, I would push a low, push back, and then do this. If it was me. This is the composite man we're dealing with, though. Of course, the market is many faces and many people out there. So this is going to be a pretty big one, and certainly a very, very key zone for us to be looking at. Thanks also to the 950 people joining us. Appreciate you guys on a very big day. Of course, another red session market open. So this really is not the strongest level. It's in the middle of nowhere still to a degree, but we've got some opportunities. We'll come back to that a little bit later. Let's move over now to some other charts. Let's just quickly talk about yields. So we saw yields spike, and they've kind of re-spiked here on the Monday. 1% up on the 2-year, 3.4%. We're clocking in at 3.8% almost on the March Fed funds rate for next year. 3.8%. It's pretty big. It's getting up there. And we've got the US 10-year back at 3.09. Of course, we are still massively inverted. That is, the 2-year is still above the 10-year. We're still hugely inverted, even with these increases. So the economy is sick. There's no doubt about that. The bonds market's expecting a recession. Over 50% of all yields have now, of course, gone inversion. And that points towards the recession absolutely on the cards. In fact, it's never been wrong for 50 years. But that doesn't really help us as traders. Remember, that just tells us, okay, we should be looking at certain scenarios in this market. And why I wanted to say that is because a few weeks ago, and I'm going through these charts here, a few weeks ago, we brought up the case for the most logical way the market would move moving forward based on the breadth, based on the thrust, based on the data. So let's just look at the weight of evidence just from a technical perspective. The 50% of the pullback was hit. So that's never been violated. It's interesting. Of course, a lot of you are going to say we're going to make a new low. It's very possible. I'm not saying this is the be all and end all, but that is one definite bull case. The other bull case is, of course, to do with the breadth and the thrust indicators, generally meaning that in the future, the markets will be higher. A very high statistical percentage of the time. We're talking like 90% plus. Now, it's hard to find stats, but that's what it was saying. The key, though, was we had two diverging paths. Remember, we had that pullback to the 200 SMA, and we had two diverging paths. One where it pulled back a little bit and then went super bullish, and one during recession periods where the market came back and double dipped to the lows. Well, interesting, because we've got 50% of bonds inverted, which has never been wrong to call a recession. We arguably already in a recession. So therefore, the most likely scenario is for the market to most likely come back and try to double dip down. So I think it's not really the time to necessarily have FOMO either way. Of course, I could be wrong. We always could be, but I'm just looking at the stats on the surface. If you look at it on the stats on the surface, we're obviously correlated to the 62 example and 2015 fairly heavily. They both dip in. That means more pain to come at some point over the next month and a half. For the bears, 91% correlation to, of course, 2008. A lot of people drawing this conclusion. Interesting. That points to not only a double dip, but of course, more hell to come. In these scenarios, these conclusive scenarios, we generally found that we didn't make a new low in both of these bullish cases. So it would be interesting considering the correlation here. Should we make a new low in the future? Well, that could be actually kind of terrifying. Banner blocking the writing? No, nothing about, blocking my writing. Yeah, sorry about that. Thanks for the comment there, Sean. But yeah, this is the interesting thing. I mean, obviously correlations are not everything. Breadth, all of these indications, of course, could all be being set by the composite man, that is the market, to trap us into a mindset. But I think in all cases, the great point of this is that we should be, based on the statistics we have at hand, seeing at least a dipping into the lows, or at least dipping down into these zones. So we don't necessarily have to have a huge amount of FOMO on these charts. Take it each day as it comes, practice your concepts, have some kind of plan, whatever that might be. And if we make a new low, well, of course, at that point, you're going to have to reassess and say, well, whoa, which one are we in? Are we in something like this? Is it really this bad? Is there land, as in property, actually becoming systemic? And that doesn't mean land dropping. I'm sure property is going to drop another 10%. I mean, I'm here in Australia. I'm telling you, this is my personal opinion. Property's going downtown another 10%. We've got sticky inflation. What does that mean, guys? It means the Fed and other central banks in the world are going to raise rates and stick them there for as long as they can to try to bring inflation down so that the Fed's fund rate, remember the Fed's fund rate, has to be above the inflation number. That's how they smash inflation. Once that happens, happy days, let's all go dance off. It'll be okay for a couple of years. And then the epic, in my opinion, the epic horror crash happens after that point, after people get complacent. So the Fed's fund rate is going to be sticky. This is going to be bad for property. Property will most likely, here in at least the place I can talk about, which will be Australia, in my opinion, will drop another 10 to potentially 15%. It makes sense based on interest rates. For anyone that doesn't know, there's a rule, and I'm not saying this rule is accurate. For every 1% in interest rates, generally equals 10% in property. Now, that's the general rule that people use. I don't abide to that rule, but it's an interesting one. So what we have here is we have kind of a pressure cooker. And I'm sorry if you're not interested in this. I hope you guys are. But I wanted to give my point here. My point is that we have the bonds market. People smarter than you or me, they're Einsteins. With the Einsteins. And the Einsteins are literally out there right now. And they're basically saying, guys, we're going into a recession. Or we are in a recession. Okay, cool. Thanks for telling us that, bond market. Once we know the Einsteins believe that, we then can use the data points for those periods. And remember, we had that correlation. So in all of those cases, we tended to see the double dipping. Well, that's at least helpful to building out a concept in the future. Now, we didn't necessarily have these horror shows, okay? And when you bring the stats and the breadth and all this other crap into it, I know people are going to be super bearish and say the market's going to crack itself. And it's possible it goes to 3,100 or even 3,000. Okay, that is possible. But always ask yourself this question. Even if you were long-term investing, remember how you felt 2 weeks ago. Harness that feeling, guys. When the market was at 43.20, did you feel like crap? Answer it in the chat room. Chat, I want you to tell me, did you feel like crap because you were like, damn it, I missed the lows. I'm a noob. I should have dollar cost averaged. I should have done this. I should have bitten the bullet and bought whatever it was at whatever price. If you felt that way, then, you know, it's interesting because, okay, well, let's say the market goes back down to 37.50. I don't know, something like that. Let's say it then goes to 3,100. Now, that's pretty bad. Don't get me wrong. That's extra percentage. But how bad really is it on your long-term concepts? So the problem is that most of us all start the same way. I'm going to tell you, I did this as well. Trade vesting. I do hate me some trade vesting. I'm going to buy Apple, guys. I'm going to buy Tesla. I'm going to buy Tesla. $800, guys. Oh, shit. 750. Well, that's all right. I like Tesla. So I'm going to hold Tesla for the next 2 weeks and it'll come back. Buy the dip, boys. And then you go and find some person that tells you it's worth $10,000 a stock. We've all been there. I know you. You're all trade investors. And the problem with trade vesting is you're not really prepared to hold it for 5 years, for 3 years. We all tell ourselves we are. But in general, we're not. You're wanting the quick profit, the quick mullah. And the problem with the quick mullah is we cannot do that with the trade vesting concept. The quick mullah comes if you have a plan. And of course, usually you should have an entry, very easy to do, a stop loss, and a take profit style, okay, for a trade. Have the plan and stick to your plan. If you can't replicate it, it's useless. That is important. Nicholas says, I feel so attacked right now. It's all right, Nicholas. I'm attacking my former self. It's okay. Are you going to mention Harry? Harry was not a trade investor. He was a long-term Tesla holder. He was a hodler, actually. So anyway, they're just some ideas. Let's look at some other things I quickly mentioned in the video. First one, do VIX call buyers no or don't they? I'm just going to zoom this in so you guys can see it. Interesting. We saw that spike, of course, in call put open. That often was preceded by large spikes in the VIX. It's not 100%. It's an interesting stat, just interesting. At least we have that there. The other one that we had was, of course, about the 200 SMA being rejected along with the MACD switch. Effectively loss of momentum. The data stats with that. Not good, frankly, for the next period of time. And look at these synergies. Ugh. Now, of course, there's only one stat, and it's not as strong as the other stats we've been looking at, but it's interesting. Weakness. Weakness for at least that 1 to 3 month period. It's only one stat. You could throw stats all over the place. But imagine if this was the way, we just got that signal, weakness now. in what? September, October, that would be certainly make sense. But of course, midterm election years, what do we know? Well, they often front load this period of time. I mean, it's almost exactly what you would expect. That is weakness, 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 plateau, maybe further weakness. Do we have a potential boomer coming out next year at the end of the year? It's possible. So we have to keep what I'm trying to get at here is we're going to feel fear if this market comes down further. You're all going to feel it. How are you going to deal with it? Do you have a plan? Is your plan 3,100? Is your plan 3,200? Is your plan dollar cost averaging levels? Is your plan just trade the swings and do the dance? You've got to have it. And that's what I was trying to get at. Thank you very much to the 1,372 viewers. Appreciate you guys. Love God, I'm not going to answer that question. That's not going to happen. That is not going to happen to answer that question. So let's continue through here. Let's look at the DXY, US dollar. US dollar weakening here, weakening. Swung that high in the Asian session. Boom, boom, goes a little higher, straight back down. Now, where is the US dollar? Well, we had that nice pickup. And of course, we have this potential. This is a flag breakout. Where is it right now? It's right on that sup. So the US dollar kind of needs to find strength around here. It does need to find some strength. And if it finds strength and makes a new high, then of course that will put pressure on the downward side for the euro. And it will also put a bit of pressure, you would think, on the stock market, at least initially. Of course, they're not fully synergized, but that's just it. So the US dollar is kind of around support here into the open. Let's move to the next one. Let's look at copper. So copper broke high and has now retraced all of that back down to what we call the defended zone. So remember, this is our defended zone. It's bouncing off that right now. If anyone picked that up, well, it's not too bad. Let's have a look at the small structure here, because this will really much show us what metals are going to do. Not enough structure formation yet. Okay, so copper is probably a little bit tough other than just picking the rando level. Let's move over to TLT. Obviously, TLT, very, very slow, long duration. If you believe we'll kill inflation, this could be the position. TLT is basically when we kill inflation, TLT will most likely do okay. It's a long, slow, slovenly thing. US oil, little inverse head and shoulders here. Left shoulder, head, right shoulder. Just tried to test that neckline, then rejected it. Get a new high. Obviously, if we believe yields will short-term jump a little bit more, that will be positive towards the oil trade. I could very easily see, and you probably want to look at UK oil, actually, even if you're trading US oil. Notice it's already trying to get that new high. Brent usually front loads US oil. Okay, this is the sweet crude. If you trade it, you got to think about the sweet crude. So the sweet crude, it's at that very pivotal zone here coming into the open. You can see it around that 102. Look at this. Look at this 107.50 zone. Huge resistance, huge support. Pretty good structure formation. Can anyone tell me what that looks like in the chat? Do you guys still have sound? Should have sound, Jan. What does the overnight futures market tell us? On Mondays, not much, very thin. Futures markets are very sneaky. Sometimes they tell us a lot about structure setup. Sometimes not. But does anyone know what this looks like? Potentially an accumulation? Yeah, for sure it does. I mean, you've got that max pain concept. You got that selling climax concept. You've got, of course, your AR style rallies. You've got your clear order kind of problem. You've got kind of like your area here. You've got your spring, your SOS. Of course, now we're looking towards that real potential for oil to get back to 107.50. It's doing the right things. Look at the daily. Look at the way it rejected off that bottom. Very nice spring. Very nice spring. We've seen similar things before, though, where they've just taken those highs and rejected. So you got to be a bit careful. As always, it's trade is a trade, and they can fail. But look, that kind of makes sense to potentially try to test into these zones. And of course, sweet crude or the UK oil is moving at the pace of trying to take that high, 102.43. For anyone that's watching in the car, a few of you messaged me saying you watch it in the car. I don't know how you do that, but anyway, eyes on the road, guys. Eyes on the road. So here we've got supports, resistances. They've probably all got Teslas and the 102.40. Crab Apple, McNasty. Interesting. Buffett bought more Oxy. I trust the guy. Buffett has a time frame that most of you won't be able to handle, though. He's probably trying to buy out. Who knows? Exactly. What's my view on gold and silver? Don't worry, we'll check that out in a second. So UK oil certainly basing off. We're about 32 minutes away from the market open. We've already gone over some SP500. We'll do some Nasdaq, and we'll move on to gold now, and then we'll come back over. So it came down to the beginning of my zone, 1720. 1720. Did it do enough? Well, obviously it's bouncing here. It looks pretty strong. That's mostly because the US dollar is failing, as in like it's falling off at this stage. I would suspect this is a fairly critical point as well, 1740. If we break above 1740, there's a good chance we still dip back down. At that point, you're starting to look around here and saying, okay, maybe we need to structure some potential purchase here at that point. I would guess, though, that this market will probably continue on down and still get into the zone that we've been talking about. Remember, what's the US dollar at? It's technically at support. So if the US dollar is at support, this should be a little bit of resistance here, which it is for gold. So we're looking hopefully towards gold failing. I wouldn't mind gold to go back down. Now, I don't have any interest other than longs here in gold. So you say, well, why the hell would you want this to go short, Tom? Well, I would prefer it to do what we talked about. So yeah, I would like it into our zone. And that's going to need a strong US dollar. $77, $4 super sticker. Thank you very much, Sandollar. Top of the morning to you, Tom. Top of the morning to you, Sandollar. Appreciate it, man. For anyone that doesn't know, Sandollar, I think, has been since the beginning of all the streams. Thank you to the 1,500 people that are joining us. If you do enjoy the stream, smash the like button, guys. It does help us out. So make sure you do that. Subscribe as well. I see you, the one that hasn't subscribed. Come on, guys. Press the button. It's not that hard. You can turn alerts on. You can turn alerts off. You can do anything you want. 1735. So I would still like gold to come down. Now, we've been generally correct on gold. In fact, actually fairly randomly correct. So yes, we like this level. Yes, we like this level. This level I would have liked to see more structure form. Didn't do so. Did find it as resistance. This was this was a very good sell. For anyone that got sells up here, well done. But now I still would like it a little bit further down. I don't know. I'm open to the idea, depending on what DXY does, but I would prefer that kind of thing, where we target kind of like a pullback after it does something like this towards the long side. We'll see. Gold actually holding fairly strongly as well when you consider where the DXY is from. Because remember, the US dollar is very strong right now. The US dollar just hit an all-time, well, not all-time, but a multi-year high. And the gold didn't even get a new low, which means that gold proportionately is actually quite strong in money flow at this stage. Daniel Greenaway, new member. Thank you very much, Daniel. Appreciate you becoming a member of the community. Great. Thank you. Would that pullback be kind of 1, 2, 3 low pattern? Apologies, still reading. Yeah, I mean like an ABC kind of thing. Yeah. So 1, 2, 3 would be more of an Elliott Wave style concept. Well, actually, it does bring me into an interesting point. Let's discuss Elliott Wave here for a second and go to daily. Now, I'm not a huge Elliott Wave fan. Neither. I never really have been. Okay, and I'll use a cleaner chart. 1 second. And the main reason I'm not really an Elliott Wave fan is because it's not that it doesn't work. It's just that how you trade it to get edge. It can definitely help you gain confidence, though. I like it a lot from that aspect. So if we think about it this year, we've kind of got like our A, B, C, D, or our 1, 2, 3, 4, kind of moves. And we've effectively seen the market going A, B, C on the way up. A, B, C. Okay. Then we had this similar one. We've got the A move, the B move, and the C move. So remember, the idea of Elliott Wave is that we kind of go down in 5s and we come up in 3s. Down in 5s, come up in 3s. Now, you could draw it a lot of different ways to get your 5s, whatever. But we've just seen, of course, an A, theoretically, a B, and a C. So do you know how important an Elliott Wave, if we made and cracked a new high in the future? Whoa. Massive, massive deal to this system. Massive deal. So if that happened in the future, you've got to be open that this thing's probably bullish. Okay. And the bottom is absolutely in and everything's all whatever. So if you're thinking, okay, are we going down? That is, the market's actually going to get ripped from here and totally wrecked. Then it should technically move in a 5. Wave down. We'll find out whether that happens, but certainly something we'll be following. And I'm very interested to see how all of that plays out. Let's load up ES. Let's go back to the futures market. We'll read some chat questions as well. 11:04 for me. So that means about 26 minutes into the market open. We'll read this one from Rick V. Anybody foolish enough to buy into this market right now deserves to lose their money because they will. Great Depression 2.0 incoming. And if you're blind and you cannot see it, and you are blind if you cannot see it. Well, okay. It's possible, Rick V. It's possible. Okay. So 2 things on that. If you buy the market and you're trading the market in and out in the day, firstly, you don't care about this comment. Why would you? Because it's completely irrelevant to you. Remember, a day trader, a scalper, or even a swing trader doesn't actually care about this comment. Not to pick on Rick V, of course. I can see his point and I understand where he's coming from. Of course, if China's property market failed, which it probably has in some ways already, whether they hold it, we don't know. If that became systemic and fell through the rest of the world, hey, I'm no doubt doubting the fact the financial system would split. I don't think it'll happen, but yes. Okay, I appreciate the opinion. So, of course, comments like this, it just depends on your timing. What are you trying to do? If you're trading, that's fine. If you trade vesting, well, this may affect you. If you're buying and holding for the long term, well, of course, you have to consider it. Jay here, thank you for the question there, Rick. Jay, any advice on trading the first hour of the market? I found that I am the least profitable in my first hour, mainly due to the lack of data candles, I think. Use ES and actually look at structure. You can't. Okay, so you're only probably looking at the SPY. Look at ES. Look at how the market's structured beforehand. Understand key levels. Understand probabilities of gap closes. They don't call it the retail hour for no reason. There's liquidity there, but the big guys play on the end. What's your trading system? Is it quick? Is it fast? All these, so many questions. But the big bit of advice, even though I don't give advice on this channel, would be, of course, that you should structure your trades up and use futures markets to give yourself key levels that have been defined by there's some volume around those points that will hopefully help you a little bit more. Miles Maddox, CHZ, US dollar, $2. Short double top of perp and you hate crypto. Thank you, sir. Hey, I like two cryptos, Bitcoin and Ethereum. Where do I like them? Bitcoin, I like at $11,000 personally. Ethereum, probably lower than a K. All right, let's move over here to CHZ USD. Look, it's not that I hate crypto. I don't hate crypto. I had Bitcoins before any of you had Bitcoins. I just was dumbass and sold them too cheaply, okay? So I had the Bitcoins back in 2011. Who else could say that? Who used MT Gox here in the chat? Not many of you, I'm sure. So the point is, I've had crypto a long time. The problem with crypto has always been the same, though. Can you technically trade all of the cryptos? Or can you technically trade some to get edge? Some are pumpy dumpies. Some don't have that much liquidity. Some just trade off psychological levels, and you have to focus on that. So this thing here, you said you shorted a double top. So I assume that's on a damn small time frame. Let's have a look here. Up here is your double top, I guess. So yeah, there's your double top. And you shorted it. It's come back and retested it twice. Fair enough. It's technically gone the distance that you would expect a double top pattern go to. I'm not too sure what you're asking, but basically, yeah, I mean, you're correct. Yeah, that's cool. I mean, where are you right now? I mean, I guess you're on this trend line. So if you're thinking, where's your double top meant to have gone to? Well, you're taking the distance from here to here. You're proofing that out. That comes down to where it did hit. Well done. And there's the trend line. And maybe it's getting a little double bottom. Who knows? But that's basically where it is right now. Thank you for the $2. CH said looks like ES. Yeah, exactly. So yes, ES. Let's go back over there for a second. 21 minutes till we open, guys. Well, let's look at the pre-market here. Let's have a look at the pre-market change. So we've got big companies. What's going on? Constellation, Paycom, AO Smith, Intuit, so QuickBooks, Etsy down 2, Take 2. A few hyper stocks down a little bit this morning. A few hyper stocks. Let's look at the Nasdaq. This is, oh, that's just all the stocks in the Nas. Let's look at the Dow, actually. Disney down 1.42. IBM, blah, blah, blah. Apple down 1.18. Boeing down 1.23. So it's a bit of bearishness through some of these sectors. And it looks like the more defensive sectors, Coke, Chevron, energy stocks, 3M, etc., aren't down much. Bushcraft Sisyphus. Thank you very much for becoming a member. Appreciate it, Bushcraft. Thank you very, very much. That BTC chart is looking scary. Yeah, we'll load BTC in a second. So just anyone, thank you very much, Bushcraft, again, for becoming a member. Appreciate it very much. Yeah, I think it's half off, by the way, for members. Can someone confirm that? I didn't see, but I'm pretty sure YouTube's doing some little thing at the moment. If anyone can confirm, but I think the memberships is discounted or something at this stage. ES is at 40.25. Our general process this week, I'll just quickly mark them out. Just again, follow us on Twitter. I'm starting to share these concepts at FX Evolution. 40.90, 41.25 res, minor support 39.95 for today, and 39.20 is a huge major sub, big major sub. Okay, definitely worthwhile considering support and resistance levels, demand levels, and supply. I've put a bit of thought into all these levels, so there's multiple reasons why I like them all. Of course, 40.90 is pretty easy to see why. Previous support could certainly become resistance upon the rally back up. 41.25 is one of the most touched zones of the last year. So 41.25 is a huge deal. 39.95 is just around here. And I wouldn't mind seeing, again, it's swing low, movement up past 40.40, pull back into the middle, and then long into the 4090. That would be a pretty cool strat today. If it just drops off like a knife, 3920 to 3900, I expect structure formation here. But the only bad news about that is it may take 1 to 2 days to form, which might piss a lot of you off. Finken says, I expected more blood than this to be fair, given the drop on Friday. Look, it's pretty thin, really. If you look at even the futures, like, what the hell is this? A drop like that with that kind of volume is not that it's not extreme. I mean, we've had like this candle here. It's kind of similar, I guess. And then we had those big volume candles. This was the first one that was kind of serious. These other two were very weak. Very weak. So pretty aggressive, but again, not insane. Let's look at Bitcoin. It's actually pretty interesting at the moment, Bitcoin. So my general idea, actually, that was really interesting. Look at those daily closes. All the dailies just sat there around that line. So the Bitcoin market, again, based on what we're seeing, I wouldn't mind it to take down here. In fact, I would still like that 19,000 kind of to be hit on the lows. So go and then pull back up. Could that happen in today's session? Certainly possible. I wouldn't mind it taking this low or getting into this kind of wide area here, this 19,320. I like this level in here quite a lot towards at least an initial potential rally. Now, if it gets underneath these zones, let's say you close a new low underneath here, be very careful, guys. I would think if Bitcoin gets back underneath here, it could go, unless it just goes bang, bang, and becomes like basically a swing fail. At this point, you're talking potential down to 13,000 or even 11 or 10. And remember, that's super in line with what we've talked about. I still think there's a great chance that Bitcoin goes into this area. Let's ask the chat. Where do you guys think Bitcoin goes next? Where do you think? Not my opinion. Where's your opinion? The first Epic Gamer says, love your content. Appreciate it, Epic Gamer. Did you play Duke Nukem, Epic Gamer? Here's some guesses coming in for BTC. You says here, Tom, why the VIX didn't spike more when such a drop? It's only 1 day of drop, and it was big, but it's not like super fearful yet, Not super fearful. We're still in charted territory. The VIX tends to go psycho when you're in uncharted territory. Remember, we're still in structure. Sedo Martin, $4.99 super chat. Thank you very much, Sedo. Appreciate the support. Bring him up, Sedo Martin. Okay, here's some guesses. It seems like a lot of you guys messaging all sorts of different levels. 10,500, 17K this week, says Lee Hodgson. Rohit has 13K. A few people have 10K in the pocket. See you at BTC 10K. It'd be pretty cool to see BTC go underneath 10. It'll scare the crap out of a lot of people, I'm sure. BTC broke out around 12,400 back in 2020. Good work, Kevin. Yep, that's correct. I think it was big around that 10 though. I remember it was supping. It created this monster demand. I still remember doing the trade. There was a big trade there at 10. KRL says my money is all gone. Very nice. Sorry to hear that, sir. BTC going to 7K. Oh, that's nasty. Rich C says 7K as well. And Chris says BTC October 2021 long-term downtrend setting up for third touch. So I'll just give you my quick concept here, and then we've got 14 minutes till the market opens. So don't worry, we'll get off Bitcoin in just a second. By the way, if anyone's in Australia, if they're interested in joining us for the conference, I'll put a link in the description. We do have a conference. Yes, it is technically a paid conference, but you get food, guys. And we've got some really great Australian speakers for everyone in America. I'm going to come out next year. I promise, guys. I'm going to come out next year. I want to meet many of you. So we'll do that. But we've got an amazing Australian conference, which you can check out in the links. Let's just quickly go here to, of course, what I always crap on about when it comes to Bitcoin. And look, I don't lose the faith, okay, in a concept that I believe many people don't care about anymore. which is always a good thing. And remember, it all happens before it happens. So this is, of course, the halving cycle. Most of you guys have seen this before. So Luna here, by the way, says the end is coming. All right. Well, I don't think it's the end. So it's all right. We'll scrub you out there, Selena. Okay, there you go. And we've got here this kind of pocket. I call it the pocket, 900 to 1,000 days. Now, I've crapped on about this for probably 200 days now, and I'm still looking for this. So I want it to come down, okay? I do want it lower. Ideally, it's coming soon, which would be very cool because remember, we actually think September, October could be kind of a horror month still for the markets, as in kangarooing down and all sorts of things. So even if we double dip the stock market and we come down to a 3750, it's probably going to put a huge amount of pressure on Bitcoin. It'll push it under 17 because you can already see it's weak on the charts. So there's a really good chance that it actually comes down. Now, what if that was timed pretty well within the pocket? Remember, this is a bounce way before the halving. The halving happens over here. So yeah, that's the pocket that I'm interested in. Of course, it's not a solicitation to do anything. It's just an interesting stat. Cool. There you go, guys. How'd I come up with 392 instead of the more obvious support? A mixture of reasons, but there's also a gap there, Seto. There's also a gap there. It's just where I believe the structure starts. So, of course, you know me. I generally create a box around the key zone I'm interested in, which obviously is here 39.06 to 39 kind of 29. And then I've got that smack bang in the middle area. And there's a mixture of reasons, Seto, that I came up with it. But the first one would be the gap. And then I would also be looking at closure points around there as well. 3D says, even more horrible September and October. Sad face. Well, it's not so. I mean, look, I get one thing. Unfortunately, for the market to have dropped from here to here, someone's been hurt badly. Okay. Some of you probably are celebrating. Some of you are not celebrating and you're upset. And I look, this is the problem with the markets. The markets are evil. Okay. There's nothing cool about them. It's a mechanism for stealing money from others. Okay. That's what it is. If we want to think about it, just usually it's Wall Street stealing from us. And sometimes we win and we get one back on them. But overall, it is a pretty brutal mechanism. So you've got to remember, and this is why I never say you shouldn't gloat too much about too many things. Stay humble, guys, if you can. Druckenmiller, one of the best traders of all time, investors, traders, whatever you want to call him, he literally says he's got a quote, and the quote is that of all the great money managers he's ever met, all they want to talk about is their losses. There's a great humility there. It's true. Live by that statement, guys. Don't only live by the idea of having patience and abundance mindset. That is, you're always going to have another opportunity. Don't fall into the trap of the FOMO psychopaths out there. We don't want that. We don't feel FOMO. We don't feel fear. We have a structured existence in this market. Otherwise, you're just going to lose as soon as you sit down on the table and go to your computer or your phone. Also, try not to trade on your phone. It can be pretty bad. So we've got to have that abundance mindset. We've got to have humility, because if we don't, we then become superheroes. And we don't want to be a superhero, guys, because you know what happens then. Superhero syndrome. It's bad. I train people about that all the time. Celebrate volatility and price action is what we want, says Rip Griff. FOMO is poison, says Grim K. Hall. By the way, if you guys want to help people in the community, why don't you just basically think about messaging everybody in here? Just let them know whether your trading changed when you felt less stressed to have to trade each day. If you have like a little story, chuck it in the chat. I'll highlight it. if you have it and it's good, I'm always all about that. So we've got 8 minutes here, guys. Let's look at the Nasdaq now. Let's have a look at the Nasdaq. Now you'll notice I barely look at the Nasdaq. It doesn't mean you can't trade the Nasdaq, but I do think that the SPY is the one ruler of them all. And I'll explain it just really quickly. Logically, the SPY is made up of 500 companies. It's split between multiple sectors and stocks. Yes? The Nasdaq is basically technology, bio, that kind of stuff. It's hyper growth and growth. Therefore, it's not going to offer you as good a spread of indications. The Nasdaq is nasty, guys. It spikes you. That's what it does. It goes, woohoo, I've taken your stop. And then it goes off in the opposite direction. Just remember, the Nasdaq is a sneaky one. So here's the Nasdaq. Let's have a look. This is not actually a level. So I think when we look at this chart, it still looks good. Don't get me wrong. It still looks pretty nice. And obviously it filled this little gap thing here and stuff. It's not too bad. So you've got, of course, this level up here, which is going to coincide well with the SPY, that 12,800 to 12,870, the closures. This is a key zone, a very touch zone, which is pretty much similar to the 4125 area on the SPY. So again, that's why it's so similar when you're thinking about what's going to go on. Where's our big supports this week? Down here. Probably around 12,000 to 12,154. That's going to be a bit of a box area that you're looking for. What's that going to be equal to? Something around 3920. So they're all correlating with each other. It's the same thing. It's just a more spiky version of it. Let's have a look here what you guys have got. Okay, here we go. We got random dude. Interesting story. I lost 100K plus because of FOMO and overtrading. That's a shame. Used to trade 20 plus contracts a day. It's amazing you've turned it around though. It takes strong mental capabilities. Now I hold one contract over 2 to 3 days, more profitable than ever. Nice work, random dude. Remember, I call scalping and day trading the ability to use multi-time frames to find trades that are on 30-second and 1 minute charts and 5-minute charts, which I like then to hold for a couple of days, ideally, possibly a day as well. And I still call that scalping. Scalping and day trading is ridiculous because the thing is, it's all this concept, yeah? And don't worry, I've got a scalping course coming out soon, guys, if you're interested. Someone said money-making machine there. You've got to think about it as what you're really looking for is high probability areas, and you want to stack things on those zones. But you don't have to, remember, don't get caught up in this idea, I've got to trade scalping, I'm going to be in for 3 seconds and I'm going to get out. That's not cool. Long term, that will rip you apart. It really will. It'll rip you apart. What other stories we got here? You guys should all buy what was it? One of those therapy guns. You mean like, yeah, I've got one of those massage guns. They're pretty good, by the way. Not bad. Thank you for the story here. Yep, that's good, Gary. Gary's been chilling since April and cash. There's always been an opportunity to take long and swing-based systems. Mr. Nick's $2. SPY options are the definition of liquidity. Yes, fair enough, Mr. Nix. We do love the SPY options. Thank you very much for the $2. This is correct, Ken Abbott. 50% of the Nasdaq is only 9 companies. The other 91 don't affect the index. Well, that's not true exactly. They do affect the index, except that, yes, you're at the will of 9 companies. And, of course, most of those companies are very similar. That's good, Aussie Cobbler. Appreciate that. I didn't see any other stories. Maybe there are some, but thank you for the ones that gave there. A few of you guys mentioning that you got stuck in some crapper stocks. Yes, unfortunately, most people did. A lot of people just got into the market in 2020. And let's face it, everyone was buying hyper stocks and SPACs. One thing I can consistently say is I hated 2 stocks on special. Actually, I hated many stocks, but I specifically, and the community will back me up on this, I hate SPACs. I hate them. Really dislike SPACs. They were dodgy from the beginning. They're always dodgy. Dodgy, dodgy, dodgy. And I really disliked space stocks. And I certainly didn't like Roku or Zoom. A lot of people would know that. Oh, that sucks, man. Lost 20K on SPACs. Yes, I do hate SPACs. Unfortunately, that hit you. Reese Dillon, $5. Hi, Tom. Can you take a look at the DAX? Sure, man. Got a few minutes till the market opens here. Let's go quick DAX, and then we'll get straight into that SPY onto the open bell. So DAX is kind of similar to the others. The only problem with DAX from the perspective of where does it fall to is we don't really have the same subs. I mean, you can see here we've got this really beautiful zone down here. Technically, that should be equal to a 39.20. However, I don't think it's going to be. The DAX is weaker because money is jumping out of Europe. I show that on the weekend video if you haven't seen it before. My guess is DAX probably would follow the SPY here. I would actually look at the SPY for the analysis today. And if the SPY comes down and does the dance, then the DAX will follow it on the way out. So the DAX will follow, in this case, Reese. We've got 2 minutes till the market opens. Let's have a quick look around. Yeah, you look at the SPY, man. The SPY is probably going to help you on the DAX more than the DAX itself today. So here's some of the main movers in the pre-market of the Dow. We've got the downside 1.5% on Apple, Disney down 1.46, just to name a few. Go over here to the SP 500 stocks. These are the big winners here in the session. You can see it's not too many. Bed Bath and Beyond. Bath and Body Works is that one. Exxon up slightly. Of course, the oil stocks doing okay at the moment. Intuit, Seagate, Hyperstocks, all of those things. Disney, Apple, some of the big ones are in there. So they're all interesting. Check out Amazon as well, just from the perspective of where it's at. See, Amazon broke a low. So again, this kind of predicts to me, and it did fill that, remember, that it did fill this gap, that there's still more pain to come because there's a lot of stocks that have similar openings on gaps. Even Apple is a 156. So ding, ding, ding. We've got the open up here. Random Dude has a good one here. I just want to bring that up and we'll just quickly go through the open. So we've got Amazon opening 129.85. Let's have a look at the actual SPY. 40.23. I'm going to load this up versus the real one. Remember, have the SPX open as well. So we've got a gap from 40.57s, like off to the races, guys, all the way down to 40.23. We do, I don't know why they're there. I'll get rid of those. So we've got two kind of key levels here. Remember, there is a gap sitting at 39.21. There's key kind of big res sup somewhere around that, just underneath 4,000 today. I'd like to see the market go bearish initially with a bullish overtone, and then in the middle of the session kind of come back to through here with that idea of trying to get that 40.90 into 41.25 short potential later on this week. You're most likely not going to see that today. Will the market just instantly rip high and then sell off this zone? It's probably not a trade I would take. But, you know, I'm pretty patient and pretty chill. I don't mind having 3 to 5 trades a week. I don't know if that's too little for you guys or too many or whatever, but that's a pretty good level to be. Random Dude says here, all my losses are due to mental flaws, not sticking to trades and not having the conviction. Once I took that out of the equation and focused more on the bigger timeframes and structures, everything changed. I'm with you there, Random Dude. You know I am. Multi-time frame. Monthly into weekly, into daily, into 4 hour, into 2 hour, into 1 hour, into everything. You can still trade a 1 minute chart if you wish to, but you better damn well know what's happening on the high time frames and where the key zones are. So Random Dude's obviously doing that, which is excellent. Being an Aussie, when will you do some analysis on the SPY? Look, I do ASX sometimes. The problem with the ASX is that this year we've obviously got a fairly strong market in comparison to the US because of the inflation. Well, our 3 sectors, which are energy, metals, and financials. I actually prefer the ASX for the stocks. Virgin Galactic. Yes, I do dislike Virgin Galactic. What is that stock even doing nowadays? 4027. What was it called? Space, the actual stock, yeah. Space, SPCE. Ah, that's the one. Ugh. I wonder where that guy went, that one that made the bet with me. He never came back, guys. He ran away when we had the bet about this not going to downtown at 50. He said 100. I said, yeah, right. I said more like 10, but he ran away, guys. Yeah, unfortunately, SPCE, this stock, you can't make money out of space yet. It's like marijuana or 3D printing, or I mean, what the hell happened to the 3D printing companies? You know, there was so many of them. All these fads, even lithium, multiple times over, lithium has gone and then failed. It always happens. So we've got this little rally here early in the Nasdaq. It seems like that's the one being bought. I'll load that up in just a second. Just trying to fill that gap. SPY still fairly flat, really, 40.25. So Nasdaq's about to go to potentially an even. Here we go. It's about to get that gap done on just the futures contract. Views on silver. What's wrong with cannabis stocks? My point about cannabis stocks is the hype that came behind them. If you want to look, Ian, check out cannabis stocks from 2000 and I think it was 17 or 18. You'll see what's wrong with cannabis stocks. It's the earnings, man. It's the earnings. The moat. You got to have big moat, guys. You need moat. If you want to hold stocks long term, get the moat. If there's no moat, it's not good. Mr. Nick's $5. What works for me is to trade the larger time frames with a defined specific process that is simple and high probability overall. Well, yeah, I mean, if we have high probability, that's what you want, Mr. Nix. But yes, you want to have a defined, replicable concept, replication. Just because you think something's going to happen, that's lame. Okay, that doesn't work. That's not replication. This is a business. Trading's a business, guys. You have to be so patient to wait for the opportunities that you believe that you can replicate because you've seen them before. All the great traders ever interviewed will always say the same thing. I stayed in my lane. I waited. I was patient. And I took opportunities when I saw them with my system. So if this market rallies here and it keeps rallying through, who cares? If you say, oh, I missed the buy, I don't care. Neither should anyone else care. No one cares if you missed it and you're whinging about it because, again, there's opportunities at different prices in the future. You're a trader. You don't really care what the price is. You just want it to be in the high probability areas. If it doesn't do what you think it's going to do, and admittedly today, you know, my process was thinking, okay, we might get that kind of spike and then bet up through, and then that's what I want to see. If I don't see it, I'm not going to do it. William says NDX and SPX. Okay, you're doing a code. So if you're doing NDX versus SPX, yeah, it's cool to have these types of things. Weekly. Not too sure what you're upset about, though. I've focused this chart a few times. There's actually a crazy trend line that sits here. Check this out. It's crazy. So if you if you go back for years and years and years, there's a trend line that sits through these. I think it's on log. And yeah, it's pretty wild. It sits all the way through from 2006. And it's been pretty consistent with holding the market up. Of course, I'm not drawing it correctly here, guys, on the weekly. You put it on the monthly. But yeah, been very, very, very consistent for a while to be the buy zone for the combo. And comboing is really cool. Big greens. It's up about 0.3%. Ken Abbott, $5. Thank you very much, Ken. Appreciate that. Shane Derge. Thank you, Ken. Thank you. Thank you very much. Shane Dergy says here, if I miss the trade, can't I ask the market for a do-over? No. Doesn't give you do-overs. It's time for NDX, right? On this chart, Well, look, if you believed that we were in a bottoming process, the S&P 500 should theoretically be weaker than the Nasdaq, because remember, what leads out of a recession, or what leads out of a market bottoming process? The growth stocks. I don't really think that's happening just yet, but hey, could be. Sedo Martin, $1.99. Can you take a look at CCJ? Thanks, lad. Sedo. By the way, anyone watch F1 on the weekends? Anyone watch F1? It was quite boring. I've got to say, other than Max kicking everyone's ass, it is very disappointing what's going on with F1. Stupid Ferrari. Useless. They are useless. Ridiculous. Morning fake out? Yeah, certainly quite potential. So this is, why don't I type in lad? CCJ. You got me there. You got me, lad. I was kind of liking that one too. I was like, oh yeah, that's sweet. Drawing my little channel on there, whatever the hell that was. By the way, I want for the American audience out there, you got to vote. When I come to America, which burger should I try first? Okay. I want to know the answers, guys. I want to hear the culinary expertise of the American audience. Which is the burger to try? And don't say McDonald's, please God, or KFC. Please no, or Burger King. I don't want those three. None of those. But I would like to try a burger. Let's see what you guys say. It's been very decent, this stock, for weeks and weeks and weeks. It's actually pretty strong. I gotta say that here. Other metals, minerals, non-energy. It's really strong trend line buying that's happening. It looks pretty strong. I mean, it's breaking a new high here. As long as it holds that, you'd think there's more to come. Pretty decent. Not sure why, but yeah. I mean, fundamentally, it looks good as well. It's coming through these highs. Pretty strong little point there. I assume it's... Yeah, I'm not too sure what exactly in. All right, here we go. So we've got five guys, in and out. Which barbecue is correct? Yeah, well, that's true. Don't worry, that's my next question. Nation's Giant Hamburger. What the hell is that? Nation's Giant Hamburger. Oh, it's actually a place. Oh my goodness. Look at that. It's just like, I don't know if anyone's ever seen the Nation's Giant Hamburger, but there we go. Well, they're loving it. Interesting. Kind of just looks like a fish and chip shop kind of burger, which is not bad. Nation's Giant Hamburger. Never heard of it. Thank you very much for recommending it. In and Out seems to be winning pretty hard with Five Guys. No, there's no Chick-fil-A. Poor Chick-fil-A. Mike's BBQ in Philly. So I have to go to Philadelphia to get that, do I? In and Out is overrated. There you go. Peanut butter burger. I will not eat that. Actually, I eat anything. It doesn't really matter. I'll try anything. There's not many things I haven't tried. I'd like a good burger, though. Even if it's not fast food, a good burger. So consider this. I'd definitely be going to New York. I'd definitely be going somewhere in Florida. I'd definitely be going probably Miami. Cali, obviously. Vegas, that kind of place. Peanut burger I want. All right. So anyway, this market, back onto the market here. Thank you very much for your recommendations, guys. I'll read those later. Thank you. Miami for the win. Yeah, I probably would consider that place if I was moving to America. I'm definitely scoping just in case. 40.42. So here's US 500, and we've got that kind of gap fill. Now, ideally, I didn't really want to see this happen here early in the session. Still could be a false break to the downside. I don't think this is high probability trading, guys. I think there's more high probability trading around these zones here towards the short and, of course, towards the long. So this is what you would call lower probability trading. And there's a reason why that's there. And it's because it's actually stuck in the middle of the low and the high. So effectively, it's the 50% fib. At the 50% fib, no one really wants it. No one really hates it. No one really does anything with it. So it's not a high probability extreme zone of any kind. Therefore, it's difficult to fall into the trap. I wish there was something better there. Let's go over to gold for a second. I just want to see how that's opened. Gold's gone positive. Okay, and it's actually just taken this. So it got down to that first opening session, which was 1720. If anyone got that, well done. We've now seen it take that high just slightly. So I'd be looking for pullbacks to gold. Something probably going on around here, around that 1726. It could easily come back like that. Check out DXY here. Still sitting on the support. So DXY is still holding its own as best it can. Here's the kind of flag. Obviously, that big wick. It's still technically in the upward trend for sure. Made a new high during the Asian into European session. It's weakened into this zone. And now we've got that real potential for it to maybe flick up here. So be careful here with the DXY. See if that thing flicks up. Let's look at the small time frames. 5 minutes. For DXY, I'd want it to take here. So I'd like it to go bang. That'd be good. No mask required. Hey, I don't think, oh no, we do have to wear them somewhere here. But I don't mind wearing masks in medical centers and stuff. That's all right. Stocks are rallying. I could have closed at 41.06, but I didn't. Now I'm down 700 euro profit and want to go long. Oh. 41.06. Oh, wait a second. Did that just take the high? Let me check that out 1 minute. Ooh. That could pose weakness here in this market, actually. What it does here is going to be very, very interesting. I'm just going to watch this for a second here, guys. Just watch this. We'll just check it out. Kevin N says Lad needs to go in your watch list. Yeah, I was pretty happy with whatever I was doing there on Lad. That's pretty good. We'll just quickly watch this one, guys. Just interested to see how it deals with this, because remember, it just took that 40 high, kind of got close to the gap. Obviously, the Nasdaq rallied early. Just looking at this very small time frame. I'd like to see if it makes a new low after doing something like this. Maybe here. Thank you very much to the 1,500 people that joined us as well. Appreciate you guys coming out today. Key levels again on the Twitter for this week. 39.20, 43.95. Oh, sorry. What am I talking about? 43.95. Scrap that, guys. Sorry. 39.95. And then, of course, we've got on the top 40.90 and 41.25 for the reses. We'll update them through the week, but at this stage, with the available information, that's what we're kind of looking at. Dow is a long leg doji galore on the 1 minute, says Jonathan. Let's quickly get rid of these for a second here. Dow is the long leg doji. 1 minute doji. Oh, yeah. Yeah, it seems to be wicking all over the place, hey? Not too sure what else we're looking at the moment for this week. It's really just, wow, that oil is definitely powering. So that's got that new high. Let's have a look at UK oil. The high, I guess, a few minutes ago. Yeah, took the high. Needs to hold it now, but looks pretty good. Look, I still think that that's very decent, that idea of going back to the 107, 107.50. I'd like to see this market actually sell here and find a bit of weakness, moving back down, ideally again into this area here, and then dripping and then moving up. If it just keeps going down to 39.20, so be it. Gotta be patient here, guys. Really patient. It's a pretty decent rejection now. Let's see if it holds it. Just wait here for the next minute. Let's watch the 5 minute change. I'll get the 15 out. Okay, so 10. 10's about to close. I'll just close this with you guys now. We'll see what happens here. Certainly a rejection off that level. I wouldn't mind seeing Nasdaq at the same time. Nasdaq reject fairly heavily. But again, the SPY showing the better kind of like little swing high there. Truly Messiah says is definitely going up. Which one? Oil. DXY been dropping for 1 hour after hitting that 109. Oh, yeah. You mean up here at the 109 kind of 30. Yeah, once it hit that high, it's a big deal. Like, look at this on a weekly. Big deal. Bang, bang. Too high, swung it, comes down. Needs to find support here. Go that 1 minute chart again. So it needs to kind of hold a short here if it's going to do it. Lots of orders stacking 40.25. Yeah. Yeah, oil. Yeah, oil had the right setup. It had the Wyckoff basically on it towards the bull side. All right, guys. Well, I think we'll probably end it there. It's almost midnight here. So, look, thanks so much for joining us through the Monday. As always, if you're interested in finding out more about our private community, you can join that free 7-day trial. We're starting to put out dailies as well in terms of like an email newsletter. So expect that to come through soon, which would be pretty cool. And of course, we have the streams as well. If you're interested and you're from Australia and you're still up at 11:50 at night, we have a conference in October, which you guys can certainly look to come towards. It'll be really good. Got some great speakers. When we come to America next year, we've got a few friends, I guess, or people that we know in some pretty decent places. So hopefully we can do that. And I'm really looking forward to meeting some of the international audience in our community. So many of you out there. And as always, much appreciated for all the support that you guys give us. I hope you guys learn a lot. And yeah, we'll see you next Monday, same place, same channel. And as always, we'll come up with a daily recap video tomorrow. Good luck out there, guys. Remember, even if you're super bearish on markets, you've got to be respectful of people that are bullish. Don't become arrogant. Don't get the Superman, superhero syndrome. You'll end up getting smashed. Be patient. Have abundance mindset. I know they're all just words, but if you take them to heart, they can make a difference. They did for me. Thanks so much, guys. You have a great session. Have a great day, and we'll see you very, very soon. Bye for now.